Hello traders, Cousin Benny coming to you from theclosingprint.com, Sunday the 22nd of November with your weekend video newsletter. In this edition we'll discuss the markets, which didn't move much last week with a pretty nasty close on Friday, the indices closing near the lows of the session. That said, IWM did outperform last week, as well as the international markets and EEM. The emerging markets mustering a 1.5% gain for the week. The silver lining, however, was that Friday's losses came on lower volume than we saw on Thursday. And despite the losses, advancing stocks outnumbered decliners on both exchanges, the NYSE and the IWM, by a small margin. Top-rated FANG stocks and tech stocks ended lower, with the exception of Netflix, Tesla, and Roku, with Netflix and Roku most likely edging higher on stay-at-home sentiment. We did have the sectors improving near highs, while XLY and XLP ratio is bullish and on watch as it's starting to flatten out a bit on the shorter time frames. XLU and XLV are weakening. International markets looked better, as we previously mentioned. We'll look at some IBD 50 names that held up fairly well, as well as some MarketSmith Growth 250 showing relative strength in white, stocks that funds are buying in green, and the blue dot scan candidates in cyan. Most of our indicators were bullish, with 12 bullish, 4 neutral, and 4 bearish coming into this week. And we have Bukowski with his CPI green since beginning of November at 50%, neutral with 8 bearish patterns, 8 bullish patterns, and 490 patterns waiting for breakout. Bottom line, we're neutral. We're waiting on fresh open interest data this week. Breadth is still improving. And we have the S&P Gamma resistance at 3,600, in addition to support at 3550, which held last week. Despite the selling on Friday, we have managed to move sideways and remain near support on the daily time frame, with the S&P 500 showing RSI still above 50 and stochastics embedded with MACD above its signal line. Volume was a little bit lower than what we saw on Thursday, and also from what we saw on Wednesday. In addition, short time frames like this 15-minute chart show RSI is closing in on oversold, as well as stochastics. We could get oversold and bounce first thing in the morning on Monday, Tuesday. With a similar condition on the NASDAQ 100, RSI is now oversold on the 15-minute time frame. Price action did pull back. We do have a support level that we tested on Thursday, and stochastics is oversold and ready to turn. So all depends on how we open on Monday and whether or not institutions defend the support levels that we were looking at last week, with S&P 500 gamma levels at 3,600, with these two levels at 3,500 and 3,550 holding as support last week. With the star performer last week being small caps, we are anticipating that we could see a follow-through as the Russell 2000 closed near the highs of the week, with RSI continuing higher, gaining 90% from the March reversal lows, with the last 3 weeks showing above average volume and MACD above its signal line and rising going into this week. Consolidation of the recent gains in time rather than price also is reflected in XII, the ARCA Institutional Index, the 75 stocks most commonly held in institutions' core portfolios. The caveat, of course, is what they do this week. So we want to keep an eye on how they position going into December options expiration, as there's also the possibility that we could stay in this range and come back and test these lows again. Since breadth has been improving over the last several weeks, we also want to keep an eye on the broad market. This is the S&P 1500 composite of the S&P 500, S&P 400 mid caps, and S&P 600 small caps. Note we are still on a buy signal. Green is above red, and histogram is above the trigger line at 2. Price action here as well on the S&P 1500 is consolidating above the 20-period moving average. Therefore, it will be very important to us to keep an eye on breadth. It needs to continue improving, as we've seen with this trough that built recently over the last 3 weeks. We have this bullish trending cycle still unfolding, clearly showing us breadth is improving, which is also reflected in the number of advancing stocks versus declining stocks for the week. We're still above the green zone and look to consolidate at a minimum starting this week. We also want to check out the Wilshire 5000 composite index, which shows the Copoc cycle flattening out a bit near the highs. As we trade into the end of November and into December, we want to see this cycle continue higher. So we want to see bonds and commodities support this thesis to start this week of trading. Bonds started to catch a bid last week as the S&P 500 slightly underperformed what we saw the UST bond doing last week, which was confirmed in the 10-year yield as 10-year bonds moved higher. The 10-year yield pulled back slightly on Friday. It's still making a series of higher highs and higher lows. Momentum is clearly bullish in the upper panel. And if that continues, we would expect to see S&P 500 break higher into year end. If we roll over and we find resistance at this level, then we would expect to see the 10-year yield dropping a bit, which would be bearish for equities as a confirmation signal. In addition, that weakness in the 10-year yield also showed up in junk bonds. We saw a doji for the week, so we want to keep an eye on this. If it starts to move higher early in the week, that would be bullish for equities and bearish if it drops. We also saw AGG, the Barclays Aggregate Bond Fund. This is the kitchen sink of all bond types, collateralized mortgage debt, etc. We're starting to see a cycle turning. So this could be forecasting a headwind for equities, not to sound too bullish for stocks. If this continues to move higher, that would suggest that institutions are starting to position more bearish into year end, and something we need to watch closely. As the same could be said for TLT, the 20-year bond, which started to break trend. Looks like it's starting to bounce for the second week straight. If you're thinking about hedging, TLT looks like a candidate where you could put some of your money if you think persistent weakness will leak into the market this week in the S&P 500. Remember, IWM is showing strength, so we'd like to see IWM continue higher and for TLT and AGG to pull back a little bit going into this week as a confirmation signal. We'd also like to see some of these currency pairs pulling back a little bit. US dollar has been moving lower, so the British pound US dollar pair is moving higher. That's going to put a little pressure on the London Stock Exchange and the FTSE. As we can see with the London Stock Exchange, which is still in this descending pattern, having bounced on Wednesday, we'll look for a follow-through this week. If you're trading on the east side of the Atlantic, if that doesn't happen and the dollar continues to show weakness, we'd expect to see commodities outperforming like we have with copper along this trend that started back in March, forecasting a bullish cycle. The current cyclical bull market that we're in right now is indicating a bullish follow-through, at least in the construction-related names like the builders, home improvement, and construction products industry groups. If you're bullish equities, we'd want to see crude oil continue to move higher like it did over the last 3 weeks, which would be bullish for equities short, intermediate, and long term. Failing to mention the lack of a safety trade in gold would be a mistake, of course. Still below its 50-period moving average in this descending pattern, so there seems to be no safety trade here in gold. So if you're trading the precious metals, keep an eye on this. As institutions don't seem to be that worried, I'd be positioning more so in bonds, as we just got finished talking about, if you're concerned about a hedge and weakness in the equity markets. The sector heat map has been improving, updated every week from left to right every Friday. This information is filled in. We can see more green and lime greens and less orange and red for the S&P sectors and subsectors and industry groups, in addition to what we saw last week in international markets, with the dark green area mostly in Europe. The caveat this week for the bulls is that the sectors were outperforming last week and then faded towards Wednesday, Thursday, and Friday. So most of these are above the 21 and 50 day, with the exception of XLU and XLV, which are underperforming. XLV did manage to stay above the 21 day, but XLU is starting to fade. So with this overbought condition that we're seeing, we need to see this consolidation for the last 2 weeks break to the upside on most of these sectors. That would show strength. And if you're thinking bearish on the markets, looking for a pullback to the 21 day, that's also a possibility. So it'll be very important that we watch what happens very early Monday and Tuesday. Here is the IBD 50 for the week. I have to say we have a fair amount of stocks that are set up and look pretty good this week, as well as in previous weeks. Namely, what I saw in BABA last week, where we had a lot of volume that showed up on Thursday in the way of blocks. I think there was like a $50 million trade on BABA on Thursday that marked the low. The turn that we saw on Wednesday followed through on Thursday, and then of course we gapped up on Friday. So this previous IBD 50 stock, while not on this week's list, does warrant attention, as we could see a follow through back above the 21 day and 50 day in the weeks to come. That can also be said about AMD, which is not on this week's IBD 50 list, but has been on previous watch lists. We did close above all of the key moving averages, the 9, the 21, and the 50. I wrote about this on Friday. I'm looking for a follow through and a break above this level at 87.05 to indicate and confirm that we could see a follow through in some of these semiconductor stocks. While Chegg, also from previous IBD 50 lists, looked like it could follow through. It stopped at the 21 day on Friday, watching for RSI to get back above 50. Stochastic is what caught my attention, as well as MACD about to turn, and the volume, which looks a little sneaky from Tuesday on. I'm thinking institutions are picking up shares and could be seeing a move back up to the highs if it does manage to close above the 50 day this week. Digital Turbine also looks very strong. More than likely, we get a push back above these recent highs and a potential triple top breakout. RSI is above 50 and rising. We are at an area over here on the left, the histogram, showing that there's a lack of supply as we ease higher. So all depending on what happens with stochastics and MACD, if volume continues to pick up, we could see a breakout on Digital Turbine. We also saw Crocs from previous watch lists continue along its path higher, breaking the barrier to 52-week highs on Friday. RSI is pegged at 70 again, showing muscle. Volume came in, MACD crossed, and stochastics continues to move higher. So if you're still in this from previous watch lists, I'm looking for a breakout and a continuation. Etsy, also from previous watch lists, we had a nice follow through last week, closing above the 921 and 50 day on Thursday, following through on Friday. A little bit of selling because of the weakness we saw on the indices on Friday, but looks like this is going to continue higher. RSI suggests there's more upside potential, breaking above this trend line in an area of little supply, as histogram indicates. MACD crossing, volume increasing, and stochastics rising. Stochastic rising is telling you that you should anticipate closes in the upper half of the daily range by design. That's what stochastics is telling you. With the strength in copper, you should also expect to see these building supply providers like Floor & Decor continue higher. I just installed 800 square feet of wood flooring in my new house. So companies like Floor & Decor are benefiting from the exodus from big cities into more southern locales like Tennessee, North Carolina, South Carolina, Texas, and Florida. So we're looking for this trend to continue. As RSI suggests, we're in an area of no overhead supply. Volume increasing, MACD has crossed, and stochastics again is moving higher. Generac Holdings, of course, with all of the storms that we've had in the Gulf and on the East Coast, Generac benefits as people buy generators that may not have had them in the past. Looking forward to next hurricane season and being prepared. As price action moves above the 921 day and stochastic RSI and MACD turn, this is suggesting that we should see higher prices over the next several trading days. Pull from previous watch lists, we're looking for this to close above the 9 and 21 day. It's closed at the 50 day. On Friday, RSI is turning higher. That needs to get above 50, of course. MACD is turning and stochastics oversold and getting ready to bounce. Ritchie Brothers Auctioneers, like Copart does salvage vehicles, helps the insurance companies retrieve some of their losses. This is probably one of the prettiest charts that I've found recently. Notice when RSI bounces, it stays above 50, how the nice cycle turns higher with stochastic oversold each time this has happened, what kind of rally we saw thereafter. So I'm looking for RBA to continue higher this week. This is my favorite for the week ahead. Repligen, looking for a bounce off of the 21 day. We got that on Thursday and Friday. Looking for follow through. RSI suggests we could see higher prices. MACD is starting to turn. Stochastic may turn as well if we get a higher open on Monday. Sprout Social from previous watch list wasn't on this week's watch list on the IBD 50. We're looking for this to follow through. A bounce on Thursday at the 50 day. Strong move on Friday. RSI is turning back up above 50. Volume came in quickly to snatch up shares, and stochastics has turned and is starting to move higher. Tempur-Pedic riding that trend of new homes, the exodus I talked about previously into those southern states, people buying new homes, buying new mattresses. We're seeing Tempur-Pedic rally off the 50 day. It's a little extended right now, but it flagged to consolidate recent gains, so maybe we get a follow through on Monday. Viva Systems was a really good trade for most of the year, consolidated after it hit the highs in October by pulling back in this descending pattern. If it breaks back above the 50 day and above this trend line at around 290, 295, that could signal a continuation of that previous bullish trend. Volume starting to pick up, stochastics turning, and MACD is about to cross. VIP Shops Holdings, a Chinese stock. This is the first time I've seen it on the IBD 50 in quite some time, if I recall correctly. Looks like it's going to break out. Looking for a follow through. RSI is pegged, showing muscle. 9, 21, and 50 day have a nice 45-degree angle of ascent. Looking very strong going into the week. Volume picking up, stochastics embedded, and MACD above its signal line. Some additional stocks obviously we should watch are the MarketSmith Growth 250 that's showing relative strength last week as the markets pulled back. All of these stocks, including Yeti, which was a really nice setup going into the week. In white, that's the MarketSmith Growth 250. The stocks in green are the ones that funds are buying. Note Blink, we traded last week. Looking for a follow through there. And stocks on the blue dot scan. These are stocks that are showing relative strength line at new highs with the stock ready to break out. Some of these candidates might also be something you want to check out for possibility this week. In addition to the Dow Industrials, there's only 6 of these this week. All of these look pretty good for a follow through. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter. It is November 22nd, Sunday. I'm going to get outside and spend the rest of the day with my family. We'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. So be sure to check out your inbox as we get ready for a new week of trading. Take care, have a great weekend, and we'll talk to you soon.